Good morning and welcome. Patriot Radio News Hour. Joe and Jason live on this Tuesday. Our toll-free number, 800-951-0592. The website at allamericangold.com. You still haven't done it? No, you're still waiting? You still don't believe? I get it. I understand. Right? It's fine. Right? We'll just spend money we don't have. Banks don't have the deposits that they need, but it'll all work out. Just a few more downgrades today. I mean, Jason, it's like a weekly thing now. Once a week, one of the major rating agencies comes out and says, okay, we're going to downgrade these banks, and oh, by the way, the whole banking sector, they're going to have big problems, but let's just pretend it's not happening. I mean, because isn't that better? It always works out better when you pretend it isn't going to happen. So that way when it does, you're totally unprepared. Everybody knows that's how you're supposed to do it, right? Don't prepare, right? Because it'll just be better. Obviously, that's idiotic. But how many more do you need to see? And I know. I get it. It hasn't quite crashed yet. I know. Yet being the right word. You can't print money out of thin air forever. Just doesn't work that way. And now, people don't realize we're on a debt super cycle of money printing. Right? We've got a fake emergency lending facility for banks that every week hits a new record high. And why is it fake? Well, the Fed gives them money that they don't have. Right? Let's not forget the Fed doesn't have any money. And they give them money for loans, for debts, that they're actually paying significantly more than what they're actually worth. So, definition of Ponzi, definition of fake, definition of not real. It's all make-believe. Why? Why do that? Why live in make-believe? Well, the answer is simple. Because if they didn't, all of those banks that are borrowing from that facility, which they won't tell us who, I'll give you an idea of some of them today. They'd all go out of business. Man, and if they went out of business, well, guess what? Golly gee, Wally, people would be upset. And you know what? Those three banks that went under earlier this year, the FDIC didn't have any money, did they? Nope, Janet yelling at it. Oh, no, we're going to guarantee everybody. Here's the problem. Why did they guarantee everybody? Well, because Silicon Valley Bank had a bunch of billionaires in it. That's why. These banks borrowing at the Fed right now, they don't have billionaires in it. You're not going to get the same treatment. Don't think that you will. And, of course, it can't be done. But in the weekly fashion now, this time S&P followed Moody's, who followed Fitch, and said that they as well are downgrading its credit rating and outlook on a multitude of U.S. banks. Today's announcement focusing in on those regional banks, right? The regional banks, they're an even bigger problem, right? Because they're not super big, right? They're not part of the big group. Right? They're these, banks that, well, I'm a little over $100 billion. Right? I got $100 billion in deposits, give or take. They're not tiny, right? They don't have, $100 million. No, they got $100 billion worth of deposits. And Jason, guess what? Every one of these regional, and I'm blanketing because there may be a few that are okay, but the vast majority of these regions, they're all done.
Yeah, and it's interesting. We know how devalued the money is, and not a lot of people of America know this. They understand our money system, but a lot of them understand that, that it's fiat currency. It's devalued as years go on. And people, we buy gold and silver. We do things to make our situation better. But right now there's a contraction of the money. They've stopped increasing it for the first time in a long time. And everybody needs it, right, Joe? Everybody needs it. These banks you're talking about, they're not getting the money they need. They're not getting that liquidity. It's a debt money system, and they're having trouble getting the cash. We were talking this morning, Joe, about just not enough cash out there. Everybody's, you don't know it's actually happening unless you're really thinking about this every day, but you can feel it, right, Joe? Everyone can feel it. There's just less cash out there. It's a big money system. It's like a cultish money scheme. It's a Ponzi scheme, and everybody has to play in it. We're just forced. This is what the exchange is right now. We have to use these Federal Reserve notes, and there's just not enough of it out there, Joe. They just turned off the spigot. They're not drinking it all down, but they're not adding to the pile. So it's happening, Joe, and this crash is coming.
Drying up, right? Higher funding cost, S&P, higher funding cost. What's higher funding cost for a bank? Well, it's simple. To get deposits to stay, they got to pay a lot more, right? They're paying 4%, 4.5%, right? Normally, they'd be like, yeah, okay, we know the rates are going up. We're not paying that. We'll give you 1%. No, 4.5%. There's no money to loan. There's not enough places to make up for it. Troubles in commercial real estate is going to test the credit strength of these lenders. We'll start naming names when we get back. Patriot Radio News Hour, Joe and Jason on a Tuesday. 800-951-0592, Joe and Jason on a Tuesday here. Get used to this. The Dow is down again. Get used to that. The Dow is down again. This time, 113 points right now. The S&P is down just a few points, and the NASDAQ, which has been beaten up more, they're up for now. Up about 40 points. The 10-year note sitting right around that 4.35. It's been 4.36, 4.33, 4.34, somewhere in that range. Crude oil hanging out around $81. Gold is higher. Silver is higher. As we wait for Jackson Hole and Jay Powell. And I'm going to tell you right now, how long are you going to wait? Going to wait until it's your bank? Is that what you're going to do? Maybe you're going to wait until after. Or maybe you're going to start taking action and understand what's happening here. Because the reports that I have today, inflation is getting worse again. Sorry. I wish it wasn't. And this isn't me saying it. These are the actual manufacturers. Jobs. Look at what everybody's demanding for jobs. Wage inflation, which they were hoping was magically going to go away. Just the opposite. Hey, if I want to stay in business, I got to have employees that want to come to work. This is why you need to be diversified. I don't know how many more times I got to tell you. Cannot have more money than you need in your bank right now. It's dangerous. We had Joey on yesterday, right? Hey, he had 4.7%. Heck, he's got products that can get you even more than that. Our friends at Y-Refi, what a great opportunity. Up to 10.25%. And like I said, you get to decide, listen, there's Y-Refi, you have investment periods. You can say, well, how about for 1 year? I'm going to agree to let you tie up my money for 1 year. They'll pay you 6.25% for that year. 2 years, 7.25. Right? You get that 3 years, 8.25, all the way to 5. Now, they don't go past 5. But at 5 years, They'll pay you 10.25% interest. It's not correlated to Wall Street. Doesn't care about interest. Doesn't care about your bank. Right? It's fixed. You know what it's going to look like every single day. And I know. But Joe, man, we had a really good summer, right? There was no waves. You know what we had? We had a lot of data that doesn't do what they say, right? I'll call it make-believe data. And we had a really bad make-believe data fall off last year, coinciding with some timely good make-believe data from this year to give the illusion that things were getting better. All that data is going away. Don't believe me? Ask Dick's. Macy's. Yeah, Macy's. Someone said their stock was up today. Macy's lost an assload of money. But apparently a little less than they thought. I don't know. But listen to what the retailers are saying. Everyone stopped spending. Dick's was horrific. Matter of fact, I think their stock's down 25%. That's how bad it was. Check them out. InvestYRefi.com. You got to get your gold put away. You got to get your silver put away. You got to be diversified. You got to get your money out of that bank. InvestYRefi.com. That's the word invest. The letter Y, REFY.com. Or call them at 888-YREFI24. And I know, got to have 50 grand. So that takes some people out. I get it. But if you can, you got to at least look into what it is that they're doing. Because, again, remember what we've said. The higher the rates go, the worse it's going to be. There's a reason why. Why did we go so long without these downgrades? And all of a sudden now I'm saying, oh my gosh, every week it's another downgrade. Well, the problem was they thought like I did, and I was wrong. Jason was right. Joey was right. I was wrong. I really thought at 5% that'd be it. I already thought the recession would be here. That was wrong. And why all of these downgrades? Because the rating agencies are like, oh, crap. These rates are going to go higher. And they're not talking about one more quarter point. So today, S&P said, hey, we've got no choice. They called it a relentless rate hike campaign. Relentless. You know what we had is we had relentless, idiotic policy from the central bank for 20 years. That's what we had. Let's be real. Let's not BS. It's time to get rid of this central bank, but people don't see that. Oh, my gosh, how terrible it would be. Maybe for a billionaire. They're saying that banks are being forced to pay out higher interest rates to keep depositors from fleeing. It's not working. And you know, it's funny. Did you notice the word they used? Forced. Right? Forced. I mean, think about it. The Fed funds rate is what? 5.25 to 5.5, something like that. They should be paying way more than 4.5. And guess what? S&P and Moody's and Fitch, they know it, and they're gonna. And that's going to be the problem. S&P cut the ratings on Associated Bank Corp, Valley National Bank Corp, on funding risk, higher reliance on brokered deposits. That's a problem. So these two banks in particular, S&P said, I don't know what day it's going to be. But one of these days, you're going to wake up and one of these big, what they're calling brokered deposits left. And that's going to be sayonara for them, right? In other words, S&P is saying, hey, these regional banks, they're heavily reliant on just a couple of depositors. That's a problem. Then they said UMB Financial, Comerica Bank, Key Corp. These are pretty decent-sized banks. Also downgraded. Why? Large deposit outflows, prevailing higher interest rates. And Jason, this is what I talked about. This is why they're seeing all these downgrades. Interest rates, they're not done. They're going a lot higher, and this is going to be a big problem. But S&P wasn't done. They said, we got more problems. We're lowering the outlook at S&T Bank and River City Bank to negative, citing commercial real estate exposure. And, of course, the ultimate doozy of it all, we continue to watch for further downgrades in the entire sector. So kind of like a Fitch. Hey, the whole sector sucks.
Yeah, you keep talking about it. Not enough money, Joe. You just keep hitting it again and again. A bank needs to have money to do the money business. I mean, you go to a garden store to do some landscaping at your house. You need garden supplies. Well, what happens if you go to the garden store and there's no garden supplies there? That's what's happening at the banks. The banks just don't have the money. Joe just used the term outflows. Deposit outflows. That's a withdrawal. Deposit. Why do they call it deposit outflows? It's a withdrawal. Is that just a nicer way of saying is withdrawal
right.
Turning into a bad word?
This is customers going to these banks and saying to these banks, I'm taking my money out. Wire money to Y-Refi. Wire money to Patriot Trading Group. Wire money to Joey at Northwestern Mutual. This is what they're saying. This is exactly what it is that they're doing. And here's the thing. For those of you that haven't done it yet, boy, you're braver than me. And I don't know if it's bravery, stupidity, right? What these rating agencies are simply saying is these banks are insolvent. That's what they're saying. And I know, no, Joe, they didn't say that. You're right. They didn't. They didn't say they were insolvent. But they know. They've done the math. Right? What if this emergency lending facility wasn't there right now? How many banks would go under? How many?
Yep.
500? 1,000? I don't know. Because we don't know how many are borrowing. But you got to remember, if those banks go under, how many other banks go under, right? The whole cascading event here, and what we're seeing from Fitch, from Moody's, from S&P, you got to remember, they don't have all the banks. Now, between the three of them, they may have the majority of the banks, right? They may watch, Fitch doesn't watch all 4,000 banks, and neither does S&P, neither does Moody's. But the trend is clear. What they're saying is, man, these banks, when you do the math, it's not very good. Right? When you take all your assets minus your liabilities, right? After EBITDA, right? That's your earnings before depreciation and taxes and all that stuff. If it's a negative number, that's not a good thing. And right now, what the rating agencies are saying is a lot of these banks are posting negative numbers, Jason.
Exactly. And we talk about not having enough money, not enough liquidity, deposit outflows. I'm going to go back to Warren Buffett again. He doesn't have stacks of paper money like Scrooge McDuck in a safe. He's got that $150 million sitting in a bank somewhere. So it shows you that is it $1 billion? Does he have $1 billion?
Billion,
is it 150 billion?
Billion, yeah.
So if he's got that money parked in a bank somewhere or multiple banks, it's showing that he's getting ready for something, and he's going to be in the right place, right? He's parking his cash and waiting for everybody's assets to crash down to nothing, and so he can scoop them all up. So how long is that going to take? And how far will gold and silver go up before you really can take advantage of what's going to happen? Now, this guy doesn't do gold and silver. He's waiting for everything to die. Gold and silver is not going to be dying when these other assets are crashing. Gold and silver is going to be going up. So we can't all be Warren Buffett and have millions and billions of dollars sitting around waiting for everyone their businesses to die.
Right. And of course, Warren Buffett, he doesn't keep that money in the bank. Heck no,
Right.
He's not dumb.
Right.
He's buying 3-month treasuries, getting 5%.
Yes.
Right. I mean, 3-month treasuries probably getting 5.5. Right. That's what
Right.
he's doing. Right.
The point being, though, he's got the money, Joe. He's waiting for this thing to happen. It's a very big indicator that things are going to happen in a bad way, and you need to protect yourself now. This is why you shouldn't have money in the bank. Precisely. I mean, because he's like a hawk. He's waiting for the mouse to go run across the field, and he's going to pounce right on it, Joe.
Yeah, he knows it's coming. Right. He's just like, I just got to be a little patient. 800-951-0592 when we get back. Home sales. Well, you know where it is. Sales down again. Prices not down. We'll be back. Eight 800-951-0592. Joe and Jason, Patriot Radio News Hour. Today's special $20 gold pieces. The pre-1933 gold. And why do we like it the best? Well, because it's the most private. Privacy. It's a big deal. Right? You can buy it. You can sell it. You can trade it. No 1099s. No Social Security forms. None of that stuff. It's the best way to go. And it's considered a collectible by the government. Why is that different? Well, just remember, in 1933, the government confiscated gold. And then they went a step further and said you can't even own it. It was illegal. You couldn't buy gold as an investment. In 1935, 1945, 1955, 1965. The only gold the government allowed people to keep, because they always leave a loophole for their friends, are collectible gold coins. That was it. If you had collectible gold coins in 1933, you could keep them. Everything else, you had to turn it in, and then you couldn't own it again. That was the law. Pretty simple. Now, the government, when they decided to start minting gold and silver coins, what was the last? I think they've done some special coins, but by and large, there was no gold coins minted after 1933. They took the silver out of the dimes, quarters, and half dollars after 1964. The half dollars went to, to 1970, but they put less silver in, and then they got rid of it altogether. And then they didn't mint it anymore. But when they decided to start minting gold and silver coins again, they said any of the pre-1933 coins that were still in existence. What did they mean by that? Simply that allegedly the gold at Fort Knox, that's all the gold they took from the citizenry and melted it down into these bars. According to the former director of the Mint, Moy was his name, he said he went to Fort Knox and looked in there, went into one of the vaults, and said that they weren't even put back into tradable bar form. The pre-33 gold that got minted down. He goes, a lot of them you can still see like the face on the coin, right? They just, melted it down just enough, I guess, which is kind of weird, but okay. But any coins that didn't get melted down, these were coins predominantly that were in Europe. Because gold was money back then. And they were sitting in these European nations. They were considered to be collectibles. And look at today. We do tons of gold and silver IRAs. Do a ton of them. Jason will tell you this. I can put gold eagles in there. I can put buffaloes in there. I can put a gold bar in there. I can put a Kruger ant, a maple leaf. I can put anything in there. Panda. Guess what the one thing the government doesn't allow you to put in a gold and silver into a precious metals IRA? Pre-1933 U.S. minted gold coins. They're not allowed. Obviously, because the government's not dumb. Hey, one of the first places they'll probably go, if they confiscate it, right, we'll go to those IRAs and say, okay, we're just taking all of this, right? All of this is ours, and the collectible coins won't be in it. That's why we like it the best. I mean, it's pretty simple. I don't know. Is the government going to confiscate gold again? You got people that argue on both sides. Look at the argument today. Right? Everyone's like, well, gosh, is the digital currency, is someone going to back it by gold? The BRICS are meeting as we speak. What are they meeting about? Hey, let's use less dollars. What are they really meeting about? I don't know if they'll say it. Hey, let's get our own currency, and we should probably back it by gold. Because it makes sense. All the BRIC nations are all buying gold, right? And if this thing falls apart, which by all accounts, this is what fiat money does, it always goes to zero. Is there the potential for the government to say, you know what, we've got to do the same thing, and everyone turn their gold in? Yes. Yep, there is. I hope it's unlikely, but you can't rule it out.
I feel like there's a gold confiscation going on right now with artificially low gold prices, and the biggest gold buyers, the central banks in these countries, are buying it all up at this cheap price. Kind of feels like they're confiscating it at a very, very cheap price right now, Joe.
Record amounts. Look at last year. They bought, 1,100 metric tons? Just central banks. A metric ton, 32,150 ounces. It's a lot of dang gold. A lot of it. Now, I don't know what the laws will be. I don't. But it kind of does stand to reason that they'll leave the collectible market alone, because that's what they've always done. We don't know. But that's why we like it the best. Why do I like pre-33 gold over gold eagles? There's your answer. Pretty simple. Today, $20 gold pieces. So that's your big coin, right? The 1 ounce variety coin, right? It's the biggest coin they made. 1 through 19, $21.40. If you buy 20 or more, $21.25 at 800-951-0592. Now, you can leave your money in the bank if you want. Oh, that's up to you. But eventually, you'll wisen up and eventually get some gold and silver put away. You want to get it put away, right, when everybody's thinking, still thinking soft landing, no landing, right? Well, the water's still calm, because the water, it hasn't been calm in the last 10 days. It hasn't been calm in the last, really, 3 weeks. How about existing home sales today? Down again. Right at 4 million annualized rate. I can't tell you how low that is, but the problem was, the big problem was price. Price went up, right? I mean, and again, you think about what's happening, not a lot of supply out there. The average existing home now, over $400,000, and you got interest rates, approaching 8%. Man, that's a big payment. Patriot Radio News Hour. Joe and Jason will be back after the break. 800-951-0592. Big special here, $20 gold pieces, $21.40. 20 or more. 21 and a quarter, $2,125 at 800-951-0592. Gold's up 5 right now, $18.97. Silver's up another 14 cents, 23.48. The Dow remains under pressure as we're going to wait to see what comes out of the meetings at Jackson Hole. But on housing, this is existing home sales. So this is the big part of the market. The median price, I said average price. Average price is a lot higher. The median price, $406,700. So average price probably, I don't know, well over $500,000. Right, because you got the mega mansions and all that. That was up from the 399,000 inventories, 1.11 million. That is a little about a 3.5 month supply or so. Here's the problem with this number. These are closings. So this number reflects homes purchased mostly in May and June, before the rates really shot up. So I anticipate this barely 4 million number to go even lower. I think we're going to see numbers below 4 million, which is hard to imagine. That's really low. We're going back to 08, 09, 2010. We're going back to the housing crisis lows and getting ready to take those out. I mean, today, I know mortgage rates now are over 7.5, and by all accounts, I would expect in the next 60 days, I would not be shocked to see an 8% plus mortgage rate, Jason.
Yeah, that's right. And if we see any more hiking going on, if the news turns the Fed to wanting to boost rates more, we're not too far away, Joe. You could see 10%. You could 10% mortgage rates. For some reason, I don't know. I get this vision that's where we're headed. We're just going to end up if the inflation doesn't go away. It's all about the inflation. Really, that's all it comes down to. They're ready to stop raising rates. They're ready to print and have a party and try to kick the can down the road one more time. But you got that. The Fed, its own mandate. It has to show that it's trying to control the inflation. And if it keeps on moving, 9% mortgages, 10% mortgages, maybe even 11% mortgages.
Let's think about it here. We had a rate hike weeks ago. We got another meeting coming up in 3 weeks or so. The 10-year note was at 3.85. 3.8, 3.85. We're now at 4.35. What happened? Well, it's like I told you. See, they pulled all these little tricks to make things appear better. One of the tricks the Treasury and the central bank did, and the Fed, is they sold all this debt in short-term notes, short-term funding. Why would they do that? Well, because if there's not a lot of long-term debt out there, people will take less just to get it because there's not that much. That's over now. Matter of fact, the funding, so much of the debt has to be rolled over now. They had to stop doing it, and now they've got to issue way more 10-year notes, 20-year notes, 30-year notes. And what's happening? Well, at the auctions, they're like, well, I'll buy it. But I'm not taking 3.85, right? Heck, I'm not taking 4. I'm not taking 4.25, right? Eventually, it's going to be, How about 5%, 6%, right? And this is what Jason's talking about. We can have mortgage rates going up, and the Fed, by all accounts right now, and I'm telling you, the Fed does not want to raise rates in 3 weeks. They want to do this every other meeting, BS. The mortgage rates shouldn't keep rising, yet Jason, every week, what do? They go a little higher. And then the next week comes, they go a little higher. Why are they going higher every week? Well, because every week they got to sell more and more of them, and this is why we're talking about, hey, 8% in the cards, but Jason's right. Listen, don't rule out 9 or 10%. You can't rule that out. Any hiccup in this economy, any hiccup, and people can be like, I know the last auction I said I'd take 6. I'm not taking 6. I want 8. Right? If they want 8, that means mortgages are 10.5, right? Jason, this is the problem because no matter what happens now, the amount of debt that needs to be continuously rolled over is growing it's like an avalanche of debt that's coming into the markets right now.
That's right. And it doesn't seem like the small guy is able to take advantage of these higher interest rates. It's just guys with bigger bags of money that are able to take advantage of some of these interest rates, right, Joe?
The small guy gets crushed by these rates. Hey, I've got credit card debt. I don't have a savings. I don't have extra money in the bank at the end of the month, right? I've got $400 or $500 left. I'm not getting 4% or 4.5%. I don't have that kind of money, right? I got a car payment. I got to get a new car, right? The rent just went up because the landlord had to redo his mortgage, and now he's got to pay more. All of these factors are why it is that these higher rates crush the majority of Americans out there. That's why they all want more money, right? Hey, $80,000 is like the new $40,000. Patriot Radio News Hour. We'll be back to wrap it up. $800-951-0592. Final segment here on this Tuesday. $20 gold pieces 1 through 19 at $21.40. 20 or more at 21 1/4. We are getting the first of the comments coming out of the BRICS Summit in South Africa, and somehow the number of countries there, I thought it was supposed to be 40 nations. That was wrong. 60 heads of state are in South Africa. Chinese President Xi Jinping. I believe that this summit of the leaders of the member countries of the association will be an important milestone in the history of the development of the BRICS mechanism. Right? What is he talking about? A BRICS currency? Right? The new trading bloc? It will strengthen cohesion and cooperation among developing countries to an even higher level. According to the Financial Times, China will push these nations to become a full-scale rival of the G7. So this is from the Financial Times that China is going to be pushing the BRICS bloc to rival and become a full-scale rival to the G7, Jason. That's some pretty lofty goals right there. That's kind of saying, hey, you know what? We're back to maybe, or want to get back to, hey, there's not one power in the world. There's two powers of the world, the U.S. and the G7, and then China with the BRICS. The fact that 60 nations are there tells you all you need to know. And, of course, you've got the oil nations there. Saudi Arabia is there. United Arab Emirates is there. Venezuela is there. Brazil, obviously, which is part of BRICS. Jason, a lot of what we would call the up-and-comers, China, India, right, Russia, they're all there, and then they've gobbled up the next biggest group, which is these oil-rich nations.
That's right. So we're going to watch and see. Lots of guys on the internet are pointing to this big meeting as being a big, huge step towards, a competing currency backed by gold. But I think it's going to be more about talk and solidifying positions. And Joe said this morning to me that it's more about de-dollarization, locking arms against the dollar more than it is about a gold-backed currency. But, we'll see where it goes, Joe.
I'm going to tell you right now that it's pretty simple here. China's talking about they want to expand BRICS to have a similar portion of the world GDP as the G7 does. So this is really the first time that I've heard, okay, this is how big we want to be. We want to have, the same GDP power that the G7 has. And, of course, we got to remember that means these countries will not be trading with each other in dollars. That's a lot less dollars. Again, you talk about why rates are going so high and why they can go higher. Well, here you go. There's going to be a lot less countries wanting to buy a lot less treasury debt at these auctions if they're successful. And by all accounts, that's a pretty damn good start. 60 countries showed up. 800-951-0592. Jason and I will be right back.